I want to throw up this quick chart to start our conversation. This is looking at the correlation risk between the Europe and the Lira, because it's interesting because as volatility rises, we've seen greater correlation between a lot of asset classes, right? Sure. That's to be a given. Is this something that you're watching, given that the euro is 2/3 of the dollar basket and it could have serious ramifications?
Yeah, sure. I mean, definitely when emerging markets sell off, you see other big markets sell off as well. My personal view is I think the sell-off will be quite tepid. If you look at Turkey, the economy is not that big. It's about 900 billion. The European Union is about 17 trillion or so. So as percentage of the overall economy, it's not a huge part of that pie. And so I would say contagion of a small C, but certainly you want to watch it because it can cause volatility in the market in the short term. Because
I think the problem is that it could get quite bad and there's no kind of circuit breaker in sight, right? It feels like maybe policymakers aren't doing anything because what they do is likely to be hit back with more US sanctions.
Yeah, absolutely. And I do think that the problems in Turkey are not just a factor of what's happening externally with the US sanctions. It's more internal. It's a mismanaged economy over many, many years.
Yeah.
They've taken on too much foreign currency debt. They now can't pay it back with the Lira basically plunging 40% so far this year. And so what they're going to do is have to actually put some economic policies in place, increase interest rates, properly capital controls as well, to stem the losses that they're facing in their own domestic economy.
Raymond, I think if we had had this conversation maybe an hour ago, we might have been saying that the line is that Erdogan probably won't be doing that. But of course, we saw that the headlines cross in the past 15 minutes or so about those limits on swaps. Hop into the Bloomberg terminal here into the GTV library, and I want to show you the Lira depreciation as well. A different one here. We can see that it's at the 7 mark. It had fallen to, what, 6.8 just now that we said. To what degree does this give you optimism that there is some willingness to act on behalf of the central bank?
Well, look, we saw the Lira, to your point, I think fall another 10% earlier this morning. And so they do have to act. They're forced to act, basically. And if you've been following the president over the last couple of years or so, he's been very reluctant to increase interest rates and do what it's needed. What they've basically done is they have promoted short-term growth through too much credit growth at the expense of long-term economic stability. So they're now forced to act. I think the first step of you mentioning taking some regulations through the banks and through swap lines is certainly one measure. I don't think that's going to be enough. They're going to have to basically increase interest rates. You've seen that in Argentina and other parts of the world where they've had to do the same to basically stem the losses of their currency. Right now, the short-term interest rate in Turkey, I believe, is around 17, 18%.
Yeah.
That's going to have to increase substantially for them to stop the bleed of the decline in their currency.
Let's say there was a light bulb that went off at the central bank, at the economic czar, and they're saying, oh gosh, we really have to do something. How much do you think they're going to have to raise interest rates?
It's going to have to be massive. We saw, I believe, in Argentina, interest rates got as high as, I believe, 40% or so. I think they're going to have to raise it by at least 5 to 10%. So you're taking the interest rate from, call it 17.75 to, 20, 25, maybe even 30%. It just depends on how much the Lira continues to fall at the moment. It was obviously not a good start in Asia trading this morning. But yeah, look, if they signal to the market that they're willing to increase rates and do what is necessary, that might give some confidence back to the local currency.